Good morning, good afternoon, and good evening to all of you, depending on where you're watching us from. And welcome to the Ion Influencers Fireside Chats, where we speak to the sharpest minds from the world of capital markets. I'm your host, Giovanni Amodeo, and today with us, we have Marcia Ellis, who is the Global Co-Chair of the Private Equity Practice at Morrison Foerster. And the topic of today is to have an outlook of the private equity landscape in Asia Pacific for 2025 and beyond. So thank you for being with us, Marcia.
Sure. Pleasure to be with you, Giovanni.
Great. So we did a fireside chat last year on some of the trends for Asia Pacific. So let's start to close the loop for 2024, where we ended up, and then maybe let's go in through the sectors as well.
Yeah, I think the hottest markets in 2024 for private equity were really Japan and India. Japan, we saw many mega private equity funds bidding for the same deals. And so there was some valuation uplift that you get in those kind of competitive situations. India, there's also been probably, high valuations in some sectors. I think the best sector in India is the lower middle market, where there are fewer funds who are looking at that, and you can pick up good companies in that sector.
So let's stay on Japan. You said that we saw some mega deals. So what's happening to those who didn't win those deals and have dry powder? Do you see 2025 having great opportunities for them, or do they need to reposition themselves?
I think, what we see is some of the big PE funds that are ex-Japan funds but are looking at acquiring assets in Japan. We see them bidding for deal after deal after deal, and they'll win some of them. Nobody thinks they're going to win all of them, right? That's how especially for the LBO market, that's how it works. You bid and you bid and you bid, and you'll get some of them. So I think most of them are doing okay. I don't know what their hit rates technically are, but I see a lot of their term sheets coming across the desk, and I think they're doing pretty well. But the thing that distinguishes in Japan the people who are doing very well and the people who are not doing very well is how much of an operation they have on the ground and what investment professionals they have. There are not a huge number of investment professionals who are going to be, especially are going to have the English that a mega fund would prefer their investment professionals to have. And so sometimes it's just a bit of a merry-go-round where an investment professional is going from one fund to the other because there's so much demand for those investment professionals.
So what's the solution? Because we've seen this across the board, across the geographies. What can they do?
I actually think it's much worse in Japan than it is in some other geographies in Asia. In Korea, you had a whole lot of Koreans a number of years ago who went out to the US and went to get MBAs, went to get law degrees. You just didn't have that tradition in Japan of going out to the US and getting these degrees. So you've got many fewer people who have the English skills and have the experience of a foreign country, et cetera, than you would in Korea. In Korea, it's much easier to get people. So I do think there is a distinct problem with Japan. It's not just what you see across all the geographies.
And staying on Japan, we read some news that the central bank might raise interest. How do you think this is going to affect or could affect the deal flow?
I don't think they're going to probably raise it that much that it's going to have that huge of an effect on the deal flow immediately. I think that, it will have some effect, but not huge.
Then let's move to India, which you alluded to, and then you talked about the middle market. So are we seeing the local players, or do you see more and more newcomers to the market from overseas into India?
You certainly see newcomers in the market coming into India. Not as many of those are coming in what I refer to as a lower middle market, right? Because those companies in the lower middle market are not the ones you're going to hear about if you don't have significant boots on the ground in India. And the funds who are going after the lower middle market, most of them they are their funds are not established, they're not formed in India. The funds are often formed outside of India, but they are the people in charge, the principals are Indians. And what's happening in India that's very interesting is those lower middle market investors will acquire a company, work with it for a few years, and then they're selling it. And that has been a really good exit for them.
So this is a topic that I discussed with other guests of the Fireside Chat. When companies or when private equity firms acquire companies, is there enough of an international rosters of potential buyers for their companies? And is India the case? Or will they be sold to local buyers and to local private equity firms or to people with presence there?
I think that you've got two things that are going on in India and most places in Asia. Well, in India particularly, you've got a lot of this trade between middle market funds selling to mega funds, selling an asset in India, and that is a good exit. You know, these lower middle market funds, they'll have several of these mega funds bidding for every asset. So, and these are foreign funds from outside of India. Um, I think you've also got in certain sectors, you've got roll-up strategies so that you may have, it may be a portfolio company of a fund, but it's going to be a hospital that's going to be acquiring your hospital or your group of hospitals, or other things where we're rolling up different businesses and increasing the size of the business.
So you talked about hospital and some you alluded to some of the sectors earlier on. Maybe let's look at the different countries in Asia. Where do we see similarities in sector activities, and where do we see one sector in particular being very strong in one country rather than another?
Well, certainly a sector that that we see being strong across the board in Asia is data centers. So data centers are, there's still not enough capacity, especially in these sort of prime data centers that are very well run and that are going to be, their customers can be, AWS, other things so that is a sector that we see as still very strong and strong throughout the last few years. And we don't think that there'll be a slowdown in that. Other sectors that depend on markets, I'd say that life sciences is still very big in China, despite the slowdown in China. A lot of those deals are more, it's less of a acquiring a life sciences company in China but acquiring certain IP. That you can then roll out globally or sell to people globally. In Japan, a lot of it's sort of across the board in sectors. So you've got a lot of companies where the owner, it was family-owned business, the owner is getting to a certain age, his sons don't want to do the business, and so he sells the business. You've also got a lot of government pressure on conglomerates to sell off different non-core assets, and so that provides a big stream of acquisitions for big funds.
So we're going to touch upon all of those one by one. So data center, is there any concern by your clients that prices, since the activity in data storage and data center is very high, the prices are going up very rapidly, number one. And number two, are they concerned at all for any environmental threats and issues there?
Yeah, they're certainly concerned about environmental issues, and a lot of the data centers or the data center operators and data center acquirers are considering options for how they can reduce their carbon footprint, including, if it is permissible within the particular jurisdiction, pairing a data center with a renewable energy business so that the renewable energy can be used to operate the data center. And that's something that people are continuing to look at. The increase in the valuations, a lot of the data centers we see being done, essentially PE fund gets involved at a greenfield stage. So they're not acquiring an existing business. And when you do that, there's the valuation doesn't go up as fast as if you're acquiring an existing business. I think the other point you should be thinking about in the data center business is the geopolitical regulatory overlay. So there were a number of people who were thinking about investing in data centers, for example, in Southeast Asia, where effectively those data centers were going to be used by China-connected companies. And there are a lot of regulatory issues related to that, especially if they're planning to get chips from the U.S., from NVIDIA and other players. So that is an area in which a lot of the clients have backed away because of the geopolitical risks.
And now we saw a new president coming in the US. What are your clients? Are they creating scenarios of what could happen if tariffs will go to a certain level, another level? And how deep are they going now?
Yeah, I mean, so tariffs can actually result in interesting opportunities for PE funds, right? So you've got one situation also, say I have an existing business that is my portfolio company, and the products of that business are going to be subject to the tariff. Okay, that is a real problem potentially. But you also say, I'm not invested in the business already, and I can help this company. Say there's a company in China, and say there's another country that is not going to be subject to the highest tariffs. So I, as a PE fund, can say, okay, I will work with you to acquire the facilities in these other countries where you need in order to actually manufacture products in that other country. So help that Chinese company go outbound and set up their manufacturing in another country that will not be subject to as high tariffs. So it can be a play for PE funds, and a lot of PE funds are looking at, can we actually make money out of the tariffs?
And linked to this, I was speaking to someone yesterday and saying in the consumer space, especially organic growth, yes, can give you 1%, 2%, 3%, but then the real difference you make it with M&A. Do you expect much more buy and build activity by your clients based on what you just said on tariffs?
Yeah, I mean, we're certainly seeing that with our US clients a lot, so that they are doing all kinds of add-ons, bolt-ons, in order to increase the top line through M&A. We are also seeing that in terms of Chinese corporates that see there's no real potential in China right now. The growth is very, very minimal. So they're looking to outbound acquisitions for growth. And some of our PE fund clients are working to pair with these Chinese corporates to help them do the M&A outside of China.
And then you touched upon life science earlier on. There's a big tie between China and the US in life science. So how is that going to play on?
Yeah, I mean, the most recent regulations that people thought were going to have a huge impact on life sciences, actually the provisions about life sciences got struck at the last minute. So we're waiting to see what's going to happen. But I think there's still some deals that can be done, right? So outbound licensing by Chinese companies to US and European companies, and Japanese companies for that matter, of their life sciences IP is still possible.
And then finally, on the third point, Japan. So you see more pressure from the government for the conglomerates to dispose of their non-core assets. Who are the buyers out there? And then
there are Japanese buyout funds, right? And those, especially in the middle market space, a lot of our clients are talking about pairing with those Japanese middle market funds. because those outside, foreign, outside of Japan, middle market funds don't tend to have the boots on the ground that they need in Japan in order to do the investments themselves. So for them, an option is you pair with these Japanese middle market funds and do it together, and they have the boots on the ground. You have maybe the expertise in the particular sector or what have you.
Do you see that in other countries in Asia?
The pairing with middle market
Yes.
funds? Certainly in India, I have seen it. In China, you see it. It tends to be, the ones I've seen recently, it tend to be Middle Eastern sovereign wealth funds pairing with middle market and higher and funds that are headquartered in Hong Kong/China.
The guest that we spoke to last year talked more increased interest by LPs to do co-investments. Are you seeing that for your clients as well? And will we see a shift in the market in that respect?
In as far as China investments are concerned, we've been seeing this for quite a while now, and we've seen an increased interest sort of from the Middle Eastern sovereign wealth funds, the Middle Eastern LPs, to very much do co-investments. And I think they see that as a way to get into just doing direct investments by themselves. So they're often building up their teams on the ground in China. They want to do the co-investments. They want to have, with the co-investments and even with their LP investments now, they're demanding an extraordinary high level of transparency so that they just get more and more information, because they're trying to say, how can I move along that path and go from being LP to co-investment to just my own direct investments. And we're definitely seeing that trend. We had seen that trend previously for quite a while now, for other LPs, non-Middle Eastern sovereigns, but essentially a lot of the UK, the North American headquartered LPs have backed off of China. So their whole plan, they were developing on the ground teams and everything, and they were moving along that path, and they pulled back significantly.
We also had several guests talking about increased activity in secondaries. So in secondaries, we had 130 over the last couple of years billion worth of activity in private equity. Expectation that we're going to reach 150 this year. Do you see more continuation vehicles started by your clients? And why is that? Is that because they see the value in that company, or is because they don't know, they realize they haven't done enough for that portfolio company?
I think the ones that I have seen personally have been ones where there was a specific asset or a couple of assets, a couple of portfolio companies that they actually believed in and thought were really good. And they wanted to continue owning them. So they started up a continuation fund to move forward with them. I don't see a whole lot. I've heard some people thinking about doing this, but I don't see a whole lot of ones where they're sort of just dumping wholesale all the assets in a fund into a continuation fund. Because, it's quite complicated, not from a legal technical sense, but from a dealing with your existing LPs, dealing with the LPs that you're going to want to have in the continuation fund, making sure everybody thinks the valuation is okay. I mean, obviously you have to get an assessment, but making sure that everybody's okay with the valuation, everybody's okay with the transaction. You could really upset your existing LPs if they think that this is not, that you're tricking them or something. And there have been some incidents of people having regret after they have consented to the whole thing. So I think it's only really where the fund has definitely come to near the end of its life. There is an asset that the fund managers think is a good asset. And they're getting a lot of pressure from some LPs to just get out of there.
So you are the global co-chair of the private equity practice. Let's take a comparison between Asia Pacific and the US. How has the sophistication of Asia gone closer and closer to the US? Has it happened? at all in private equity?
I think that, obviously there are many different types of funds, and the level of the sophistication of the different funds in Asia varies depending on who's running the fund, what their previous experience is. For the longest time in Asia, almost all investment professionals at funds and principals came from the investment banking sector. So, you had a certain amount of quality and sophistication already there. And that was sort of across the board. Now you're seeing a lot of mainland headquartered funds, and it's not just mainland headquartered, but usually there's a strong state-owned enterprise component in that fund. And what it takes to be successful in that kind of fund is very different from what it takes to be successful in the type of funds we've seen up until now. It's the person who is the investment professional has to be more worried about politics than they did in the other funds. And so how you define sophistication can be different, right? This person could be very sophisticated in how they handle the mother company that is the state-owned enterprise that owns the majority of their fund. So I think that sophistication is a complicated term, right? You can take the most sophisticated person from US and bring them into China, and they'll fall flat on their face, and they'll do incredibly badly. Is that sophistication? What's sophistication? I mean, it's just many of the people who and then started up funds in Asia, they were quite sophisticated. The market itself, I think, is getting more sophisticated in the sense of there's more fund-to-fund sales, so people who are like dealing with different time periods during the company's existence, right? People who are at a less developed company who are selling to people who are at a more dealing with more developed companies. And in that way, you have a market that is more sophisticated and closer to a US model.
Few final question as we are approaching the end of the discussion. Where do you think your team will be more busy in 2025? In which region, in which sector?
In which region in Asia or in which region?
Yes, in Asia.
In Asia, I gotta say Japan. I mean, Japan is just is going to be very busy in 2025. Southeast Asia, we're always hoping for, but there are just not that many companies that are of a size that are of interest to PE players. China, my team is still busy with a lot of things in China, but a lot of it is restructuring existing investments. And
will we see more cross-border activity?
What do you mean?
So cross-border.
Everything I do is cross-border.
No. So sorry, cross-continent between the US and Asia Pacific.
I think that there are a lot of Chinese companies and Chinese PE funds that are thinking very much about doing investments in the US or in Europe. And so I think we will be seeing more of that. We keep getting calls from people who want to look about assets. Obviously, in either place, there are all kinds of regulatory hurdles to jump through to get that acquisition done. But if it's in the right sector, which is less sensitive, then you can get it done.
Marcia, always a pleasure talking to you, and thanks everyone for listening.
Thanks, Giovanni.